Let's talk about how to buy a house with little to no money down. If you're new to the channel and want to learn how to make more money, subscribe and click the bell. That way you never miss a video. Can you buy a house with no money down? The two biggest expenses that you need to avoid when buying a house with no money down are the down payment and the closing costs. This can be made possible if you qualify for a home buyer assistance program or a zero down mortgage. Let's look at 5 strategies you could use to buy a house with no money down. When you combine these tactics, it could put you in a brand new home with $0 out of your pocket. First-time home buyer loans with zero down. There are 2 big loan programs with zero down. These loan programs are the USDA loan and the VA loan. These loans are available to repeat buyers and first-time home buyers as well. However, keep in mind that they do have special requirements that you have to meet in order to qualify. USDA loans, 100% financing. You can get a 100% financing mortgage with the U.S. Department of Agriculture. This program is also known as simply the USDA loan, or the Rural Housing Loan. Don't let the name fool you. The USDA Rural Housing Loan is not just a rural loan. People in suburban areas can also make use of this loan too. The primary objective of the USDA is to help low to moderate income home buyers. There are actually many borrowers using this program that make a nice living and are located in neighborhoods that may not necessarily meet the standard definition of a rural location. Some major pros of the USDA loan are no maximum home purchase price, no down payment requirement, the upfront guarantee fee can be added to the loan balance at closing, monthly mortgage insurance fees are cheaper than for FHA, and lastly, there's below market interest rates. However, keep in mind that the USDA does have income limits. Your household earnings need to be below the median for your area. Another major benefit is that USDA mortgage rates are usually lower than rates for similar low or no money down payment mortgages. When you use the USDA to finance your home, this could be the lowest cost tactic to owning a home. VA loans, 100% financing. The VA loan is a great no-money down payment mortgage provided to veterans, members of the U.S. military, and surviving spouses. The U.S. Department of Veteran Affairs backs the VA loan. Because of this, they have lower rates, and they also have easier requirements for borrowers who meet the guidelines. Qualifications for a VA loan are pretty easy to understand. People who are eligible for the VA program are honorably discharged service personnel, active duty service members, and most veterans. In addition to that, people who have spent a minimum of 6 years in the reserves or National Guard are also eligible. Furthermore, spouses of service members killed in the line of duty are eligible as well. There are some major pros of the VA loan. Flexible credit score minimums, no down payment requirement, derogatory credit information and bankruptcy does not immediately disqualify you. Below market mortgage rates. In addition to that, as long as you have good enough credit and you can afford the payments, it is possible to get a VA loan above regular loan limits. This is because VA loans have no maximum loan amount. Low down payment first-time home buyer loans. Obviously, not every person will be able to qualify for a zero-down mortgage. However, you can always use a low down payment mortgage and an assistance program to cover the upfront costs. This will make it possible for you to buy a house with no money down. If you think this tactic might fit you better, here are some of the best low money down mortgages to think about. FHA loans, 3.5% down. Pretty much all private mortgage lenders offer these types of loans. The Federal Housing Administration, also known as the FHA, doesn't actually lend money. Instead, they set basic lending requirements and they insure the loans once they're made. If you are looking for a liberal approach to credit scores and down payments, the FHA mortgage guidelines might be just the thing you're looking for. As long as there's a good explanation, the FHA will usually insure home loans for borrowers with low credit scores. In all U.S. markets, a down payment of just 3.5% is also allowed with an FHA. Here are some more pros of an FHA loan. Upfront mortgage insurance premiums can be included in the loan amount. 500 is the minimum credit score with a 10% down payment, or 580 with a 3.5% down payment. In addition to that, the FHA can sometimes provide help to people who have past experience with recent short sales, bankruptcies, or foreclosures. The FHA will insure loan sizes up to $970,800 in particular high-cost locations in the U.S. These locations include places like Washington, D.C. metro area, Orange County, California, and parts of New York City. It's also important to keep in mind that an FHA loan can only be used to buy your primary residence, so this won't work for purchasing investment properties or vacation homes. The Home Ready Mortgage, 3% down. What's neat about Home Ready is that the earnings of everybody living in the house can be used to get mortgage qualified and approved. For instance, if you live with your parents and you're a homeowner and your mother and father make an income, you can use their earnings to help you qualify. The program can be used by any person in a qualifying location who meets the requirements for household income. However, this type of line was made for helping multi-generational households get approved for mortgage financing. Conventional Loan 97, 3% down. For a lot of home buyers, this is a less expensive option than an FHA mortgage. It's available from Fannie Mae and Freddie Mac, and it's a 3% down payment program. Here are some of the basic requirements to qualify for a conventional 97 loan. Regardless of if the home is in a high-cost market, the loan size cannot go over $647,200. Adjustable rate mortgages are not allowed with a conventional 97. The mortgage must be a fixed-rate mortgage. The property cannot be a multi-unit home. It must be a single-unit home. Another interesting thing is that the conventional 97 mortgage allows for the entire 3% down payment to come from gifted funds. These gifted funds must come from a person who is related by marriage or blood, legal guardianship, domestic partner, or fiancé. Conventional mortgage, 5% down. If you don't quite meet the requirements for a conventional 97 loan, you can always save up some money and go for a standard conventional mortgage. Because of their flexibility, the most popular loan type in the market are conventional mortgages. In most cases, you only need a 620 credit score to qualify, and you can make a down payment as big as 20% or as low as 5%. There is a requirement of private mortgage insurance, also known as PMI, with conventional mortgages with less than 20% down. However, once you have 20% equity in the home, this can be canceled. That way, you won't be forever stuck with that added fee. Before I move on to the last loan, please give this video a thumbs up and subscribe and click the bell. That way, you'll be the first to see my next money-making video. Also, type the word yes down below if you are going to try to buy a home with little or no money down. The Piggyback Loan, 10% down. This type of loan is also referred to as the 80-10-10 program. It is usually reserved for people with credit scores that are above average. It's actually two loans that allow homeowners to have lower overall payments and more flexibility. This type of loan has a great structure. Buyers bring a 10% down payment to closing. They also get a 10% second mortgage. This leaves an 80% mortgage loan. There is no PMI because you are effectively putting 20% down. This type of loan structure can lower your monthly mortgage payments and help you avoid private mortgage insurance. Keep in mind that in order to qualify for the second mortgage, you'll typically need a credit score of 680 to 700 or higher. Also remember that you'll have 2 monthly payments instead of just 1. If you want to see how you can avoid paying taxes, click the video on the screen. Here I'll give you some tips on how to pay less taxes.